JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 28th of April 2021. So welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff, guys. Just a quick apologies for the kind of slightly late start here. Had a bit of a few technical issues, but hopefully we're now back on track. But as always, guys, before we jump into the charts, quick mentioning, let's have a quick read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course, our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts now, for a quick update here on Nikkei. To be honest, I'm not going to spend too much time on this one. Just wanted to give you a quick update. But basically, we have remained in positive territory today. But as you can see, it kind of it's let's say it's a bit of a no man's game here right now. And to be honest, we're not really doing much on Nikkei, so we're not really climbing back above the 21-day EMA, nor nor we are kind of, let's say, pushing lower. So again, for now, I'll say that still, what I'm keeping an eye on here, even if we drift a little bit lower here, if the 100-day EMA together with the this hurdle, the 28,326 territory, together with this upside line, all these provide support, then yes, a nice rebound could be possible. But in case this decides not to travel lower, instead pushes straight away above the 21-day EMA, this of course may open the door towards a possible test of this short-term downside resistance line taken from the high of the 16th of February. I can see in the chat room here, good morning, Evu. Yep, good morning to you too. Hope you're having a wonderful start of the day today. Coming back to the charts here very quickly. So Hong Kong's Hang Seng Index. This one, I haven't looked at this one for a few days here, but so far the same kind of analysis remains valid. So what we need to see here is a nice good daily candle pushing above this 29,152 territory and then kind of staying above it as well, because for now, I mean, it's not even drifting lower, it's still kind of continues to form these higher lows. I mean, we can try to draw an upside support line here, something like this. So basically, an ascending triangle is being formed right now, with the upper boundary of it being the area around the 29,152 zone. So approximately around there. That's the high of the 9th of April. So of course, we did have overshoots here, but again, we failed to stay above it, and that's why I'm keeping an eye on this barrier. And if we do get that move above it, then yes, of course, higher levels could be met, guys. Now, the German index, DAX, and yesterday we drifted a little bit to the downside here. Now, of course, we broke this upside line, and in a way, at one point, everything looked very, let's say, bearish, and not very positive, of course. But for now, I mean, you can see that the index still managed to hold on to that upside support line taken from the low of the sorry, let me just grab this one up. No, I cannot There we go. The 26th of February, and for now, in a way, I can say that and looking at the cash index as well, we can see that the price is still hanging above this upside line. Let me just kind of zoom in here a little bit because this is not very clearly visible. So this is what I'm keeping an eye on. Of course, as I said, yes, this upside support line continues to play a nice role here. The cash index is currently still above this upside line, but we need that stronger move above the 15,312 territory. Not only do we need to see a break, but we would also like to see the daily candle staying above this area in order to go for a further move north. If you don't like this level, guys, if you're a little bit more skeptical, because for example, we had a nice daily candle close here on the 22nd of April, but it didn't really move further north. You can capture that high and keep an eye on the 15,328 zone. So, but again, like I said, I will start looking at the upside already on a break of this level. Of course, then we'll be very careful near this high, the high of the 22nd of April. But if that gets cleared, then yes, good news. I mean, we could see a push maybe further north. Now jumping into DXY, and here I can see that we have now started breaking this downside line taken from the high of the 31st of March. What could happen next? What could happen next? Because basically, you can see that the US dollar seems to be willing to pick up the pace. However, don't get me wrong, we might just see this as just a temporary false breakout, and if it doesn't, for example, climb somewhere back, well, actually, let me just adjust a few of the levels here, guys. This is becoming a little bit of a messy chart, and so basically, if it doesn't climb somewhere above this 91.42 zone, roughly around here, we will, let's say, stay still a little bit more skeptical, a little bit cautious, because what I would prefer to see here is maybe a stronger move above these two EMAs, the 21-day and the 100-day EMA, and in order to then target the 200-day EMA here shown as the black line. So, but at the moment, guys, don't exclude the option of seeing, let's say, this one reversing to the downside again, and potentially aiming for this this upside support line taken from the low, the 6th of January. So keep your eyes on that, guys, because again, this might be just seen right now as a false breakout. Gold. So gold is pushing lower, and as you can see, we managed to break the upside support line taken from the low, the 31st of March. Now all this now kind of creates a bit of a cautious atmosphere here, I would say, because if DXY pushes higher, then well, gold might start rolling over here and dropping below this area, below this 1760 territory. And if it does that, then well, I mean, guys, this is where we'll start looking at the downside. But at the moment, there is still a bit of hope. Yes, we broke this upside line. Let's get rid of it. This arrow no longer needed. This is what I said yesterday, guys, that there is a possibility to see a reversal like this, but if you're a little bit more on the cautious side, you could stick to this arrow here, which is around the 1798 zone. And you can see that yes, we broke the upside line. Hopefully you had your stop losses in place. And yep, now we're seeing kind of a bit of a slide here. Now on the let's say on the bullish side still, we have seen similar things in the past where we, for example, we break the downside line, we move a little bit higher, but then we start correcting lower, and then just, let's say, continue to slide along this downside line, so on top of this downside line, and then basically at one point we reverse and push higher again. So I'm not saying that this is the scenario that could happen, just something for you to keep in mind. But if we start drifting stronger here below this downside line and fall below the 21-day EMA, then well, I mean maybe we're not really, or should I say, maybe the bulls are not really feeling that comfortable yet, and more sellers could join in. So be very careful with gold right now. It is a bit of a tricky one. Another tricky one is WTI oil. So this is a bit of madness here, I would say, because it's not really clear. At one point, it does want to go lower, then it goes higher. So basically, it's a bit of a choppiness here, a lot of choppiness. And now looking at this picture, of course, we can see that the commodity is trying to make its way higher. Yesterday we had a late push north here, and yep, it continued to drift higher, and now we're getting closer to this 63.80 zone. This is the level that I spoke about previously. In order to, let's say, get a little bit more excited with the upside. And now, if we want to get if we want to go for some higher levels, yes. Probably I would prefer to wait for a nice good push above this area, above the 63.80 zone. I would like to see the daily candle staying above this area as well, not to have something like here where we had a false breakout, and then yes, higher levels could be met. But at the moment, I'm very careful here because again, if the dollar index starts gaining momentum, upside momentum, then well, I mean, WTI oil might, let's say, either stay somewhere here or even drop lower. Nevertheless, I would prefer to see a drop below the 60.64 territory here in order to go for lower areas. So keep your eyes on that one. Bitcoin. Bitcoin is struggling with this hurdle. Yesterday I kind of removed all the drawings and I started fresh on this one, and here, for example, you can see that the so far where the holdup is occurring near this 21-day EMA, and this is what I said to you guys, that in order to get a little bit more excited with the upside, with further upside, yes, a nice good first of all break above this 21-day EMA would be needed. We would like to also see the daily candle staying above this area and also above this 55,555 level, and then yes, maybe higher levels could be met. But the moment, as you can see, at the moment, this is getting a kind of the crypto is getting a hold up here, and then we're seeing a bit of a corrective move lower. However, so far the index is still trading above this upside line here, taken from the low the 11th of December, and in a way, if as long as it continues to trade above this upside line, there is still a chance for the bulls to step in and drive Bitcoin higher. Ethereum, on the other hand, is a little well, it's correcting right now, but as you can see today, this morning, we have already reached the area here, the all-time high near the 2,718 territory, approximately around there. And now we're correcting lower, and yesterday I talked about this level here, the 2,550 territory. I said that if we get a break above it, then, well, I mean, higher levels could be met. We could even maybe overcome the previous all-time high, which we did, and yep, we continued to rally here. But now this morning we're seeing a bit of a corrective move lower after hitting a new all-time high. What I'll say here is that if, for example, right now it stays somewhere above the 2,550 territory right here, then yes, another maybe another push higher could be possible. If it starts drifting and falling back below the 2,470 territory right here, now this is where it could become very interesting for more sellers, guys. And then yes, we could take it from there. I can see, okay, I can see a very nice, pleasant comment for me in the chat room. Thank you very much, Upsale. So yeah, I hope, yeah, I hope you're enjoying it. So but really, really, thank you very much. And thank you very much for the little sun in there. So guys, coming back to this Ethereum, so if it suddenly drops back below the 2,470 territory here, then yes, we could maybe consider a bit of maybe a corrective move lower. At least I'm not talking already about these upside lines, but at least the 21-day EMA, and then we could take it from there. Now, jumping into a few pairs very quickly. So let me just quickly check the economic calendar. What's happening today? Of course, we know that we do have the Fed continuing its decisions. No, sorry, not decisions, but it's meeting. Yeah, we have of course, the FOMC statement, the interest rate decision, which, yeah, of course, it's going to stay the same probably. The words "of course" and "probably" are in the same sentence, but anyway, guys, the most likely it will definitely remain yeah, at plus 0.25%. But nevertheless, we're keeping close eye on the tone, or should I say, keeping our ears open and listening on the tone of the Fed. And in terms of other economic data, oh, there we go. So we had the Australian CPI figures here, which came out as a disappointment. And well, I mean, this is the little result that we're having here on AUD NZD. So the Australian dollar is weakening, and it is drifting lower. So if you remember yesterday, I've mentioned this technical setup here that we could be forming a possible falling wedge pattern, which tends to be a bullish indication. However, that's a bullish indication only when we get a break through the upper side of the falling wedge. At the moment, I mean, what I said yesterday, that as long as the boundaries here remain intact, especially the upper one here, then yep, it could continue drifting lower. So for now, I'm keeping a close eye on this highlighted area here, the 1.0743. We managed to break that, but can we move again below it? If we can, yes, I'll continue targeting the downside. But if it cannot, now this is where it's going to be very interesting. I'll take a neutral stand, a neutral approach here, and if it stays above this highlighted area right here, which is roughly around the 1.0743, and then I'll take it from there, guys, because then maybe we could see that maybe reversal here and a push higher. But at the moment, it's not everything is looking good here for AUD and ZD. So let's see what it wants to do with this 1.0743 territory. Quick update on USD JPY, pushing nicely to the upside. And yep, we've managed to climb above this area here. I talked about this 108.34, what I said to you previously in the beginning of this week and last week as well, with when I was covering USD JPY, that if we get a break of this downside line and a push above the 108.33, yes, aim for higher levels, where our next target is the 21-day EMA and then the 109.23 territory, roughly around here. And then I'll take it from there, because I don't want to rush into anything. So I'd rather pick up on this one again and reevaluate this and see what we can do after. But for now, that's the little game plan here on USD JPY. GBP USD. So here it's a bit of a tricky one. I mean, on one hand, it still kind of looks a bit positive, I would say. From the very short-term perspective, we still have this upside support line right here, taken from the low of the 12th of April. So what could also, we see that this barrier here, the 1.3919, is somehow providing decent resistance. Actually, let me just adjust this level a little bit here. Probably it's going to be somewhere right here. There we go. 1.3926, 25, approximately around there. That's the kind of level that I'm going to be keeping an eye on for now for the upside. If that gets cleared, then yes, higher levels could be met. But if for now, I mean, we might see maybe a bit of a corrective move here lower towards this upside line, and if it holds, then maybe a rebound back to the upside could be possible. But again, if you want to be a little bit more on the safe side with the upside, wait for at least a pop above the 1.3925 territory right here. For the downside, we need to see a break of the upside line, and also ideally maybe a drop somewhere below this level, the low of the April 22nd, roughly around the 1.3824. Quick update on Euro JPY here. And so as you can see, we managed to move beautifully here above this highlighted area. Yesterday when I was covering Euro JPY, we were still hanging around here, and I said that if it stays, if it continues to trade above this 130.66, 67 territory, then yes, higher levels could be met. And yep, now we are moving further north. Now my next target on Euro JPY, ideally, it's this one, the highest point of September of 2018. That's roughly around the 133.13. But don't get me wrong, at some point we might get a bit of a hold up here, so that's why I'm keeping a close eye on this little target. Nope, let me just manage to capture this one. If I can capture this one, guys, that would be great. So there we go. That's the highest point of July of 2018, and that's roughly around the 139. Oh, let's round it up, 132 zone, and then we'll take it from there, guys. So that's my next target, 132 territory, and like I said, I'll pick up on that one later. Euro GBP very quickly here. So I'm still watching this barrier, the 0.8719. I need to see a nice good pop above it in order to go for some higher levels. At the moment, I'm just watching this right now. This whole situation, this whole everything here seems to be here still on the kind of bullish side, but we need that strong move above this area, above this 0.8719, in order to go for some higher levels. This one's pretty much straightforward, guys, and yeah, for now that's the kind of game plan. Jumping into EURUSD very quickly here. For now, I mean, looking at this picture, oh, and by the way, just a quick reply here in the comment in terms of the hourly chart, guys. The reason I'm using daily charts is because I like to get the overall picture. Again, you use whatever what's more convenient for you guys. You're the judges for yourself. So I mean, you know yourselves better, what works better for you. I'm just kind of showing you the overall picture. I'm trying to bring the overall picture, and to be honest, sometimes just the daily kind of candles for me the daily candles work better. But again, like I said, it's up to you. This is just a kind of for you a reference point, a kind of from where you can just continue with your own analysis, apply your own strategies and techniques, and guys, whatever works for you. So yeah, but it's just like I said, I'm covering these, and I like to cover these on daily charts, and I kind of, well, that's kind of my own preference, let's put it this way. Coming back to euro dollar here, as you can see, now we are breaking this upside support line taken from the low of the 5th of April. So what I talked about yesterday was that if we get a break of this upside line and we see the daily candle staying below it, then yes, well, in a way we could maybe consider a bit of a a move lower here. But to be honest, my preference still is to for the downside is to wait for a drop below the 1.1990 and then kind of go for lower levels, because here we could see a drift lower, but maybe it will rebound from somewhere from that 1.20 territory and then kind of move up again. So for now, I'm watching this one. Of course, let's get rid of this upside line, no longer needed, and now the main focus will be on this downside line here. Let me just capture it back here. There we go. This downside line, if it gets broken, yes, we could go for some higher levels, especially if the rate also climbs above the 1.2113 level. So guys, that's it for this session. So I hope you found it useful. Thank you very much for joining in, and thank you very much for your comments, for your likes, guys, for your views. I really appreciate that. That means a lot. So so yeah, guys, thank you very much, and I'll see you later on my trader's tea time, as always, 12:30 GMT time. Thank you very much, and bye-bye.